Okay, so you want to buy an Airbnb. Let's break down what you're walking into and the real profit waiting on the other side. A chic studio in the city, a cozy cabin in the woods. You imagine snapping a few photos, setting a nightly rate, and watching the passive income roll in while you sleep. That's the dream social media sells you. A fully booked calendar pops up on your screen and you think, this place is printing money. But here's what the listing photos don't show you. The 3 a.m. call because a pipe burst, the $500 cleaning bill after a bachelor party, and the fact that you aren't really in the real estate business at all. Ownership is the long game. You buy the property, usually with a 20% to 40% down payment for an investment property, and take on the debt. Here, short-term income is really just a tool to cover your cover charge, the mortgage, taxes, and insurance. Meanwhile, the land underneath builds your wealth through appreciation, historically averaging somewhere around 3 to 5% a year depending on the market. Rental arbitrage is the velocity play. You don't own the building. You sign a long-term lease with a landlord and re-rent the unit short-term. It requires far less starting capital, but it's a higher-risk trade. You carry all the operational headaches of a hotel with none of the equity upside. If the city changes its zoning rules or your landlord ends the agreement, your business can disappear overnight, leaving you with a pile of furniture and a lease that still has your name on it. Whichever path you take, you have to survive the build-out, because you're not just buying a space, you're turning an empty box into a functional environment that has to survive 100 to 150 different families cycling through it every year. A standard residential setup was never built for that kind of churn. For a professional, photo-ready listing, budget roughly $5,000 to $25,000 to furnish and equip a standard unit that covers beds, seating, kitchenware, linens, and the small details guests actually screenshot. If you want to compete at the top of your market, the properties commanding premium nightly rates, that number climbs, and it climbs fast. Durable flooring that survives heavy luggage wheels and daily turnover without scuffing or cracking, $10,000 to $40,000, depending on square footage. HVAC built for constant guest-controlled use because guests run the AC at 60 degrees with the windows open, and a standard residential system wasn't built for that kind of abuse. $10,000 to $50,000 for a full upgrade, a hot tub or premium water feature, one of the highest converting amenities on the platform. $8,000 to $25,000 installed. A dedicated, soundproofed workspace for the work-from-anywhere guest, $3,000 to $12,000. Stack a few of these and some other amenities together, and a premium build-out can easily run into six figures. That's not a cost every host needs to take on, but it's the real price of the amenities that let you charge more than the property down the street. Once you're listed, a layer of costs catches almost every new host off guard. First is the Airbnb platform fees. This changed recently, and it matters. Through 2025, most hosts paid a small 3% host-side fee, while guests covered a separate 14 to 16% service fee. In 2026, Airbnb shifted the majority of hosts onto a host-only model, around 15.5% taken directly off your payout, with no separate guest fee shown at checkout. You are basically paying for your spot in the search results, but the number is bigger than most new hosts expect. To cover this increase, most hosts adjust their nightly rate. However, a higher nightly rate seems like an overpriced listing, which tends to turn off potential guests. Next is the utility spike. Guests use more water, more electricity, and more AC than you ever would in your own home. Most hosts report $150 to $700 a month in utilities for a typical property, climbing toward $800 to $1,000 plus for larger homes with a pool or hot tub. Generally 5% to 12% of gross revenue. Then, the high maintenance churn. Heavy daily use wears down furniture and appliances far faster than normal residential use. Budget roughly 3% to 5% of your monthly revenue for ongoing repairs. That minor cabinet hinge or mattress replacement adds up over 100+ guest turnovers a year. All of these cuts into your profit margin. So, where does the income actually come from? Beyond the base nightly rate, hosts build their real income through a layered mix: mandatory operational fees, premium convenience upsells, experiential add-ons, and strategic cost shifting. Cleaning fee. Hosts frequently over-allocate this fee, charging guests a premium while paying independent cleaners far less and pocketing the difference. A typical 3-bedroom listing charges a $150 to $200 cleaning fee, but hires an independent cleaner for $100 to $150 per turnover. Some hosts skip the middleman entirely, cleaning the property themselves and keeping the full fee. Cleaning supplies are often bought in bulk to stretch that margin even further. Extra guest fees. A per-person, per-night charge for any guests beyond a set baseline. For example, $25 a night for each guest past the first 4 in a 3-bedroom home. In theory, this covers the extra utility cost each additional person adds. But let's be honest, a living room with 5 people isn't really running the air conditioning any harder than one with 4. Pet fee. This is charged either as a flat per-stay fee or a nightly fee to cover the risk and deep cleaning that come with hosting animals. Typically $75 to $150 per stay, or $20 to $50 per night if charged that way instead. In most cases, though, this cost is already baked into the cleaner's turnover rate, or only adds a small amount on top. Note that service animals are exempt from pet fees. Early check-in/late checkout fees. Hosts monetize flexibility itself, charging guests who want to arrive before the standard check-in time or leave after standard checkout. This is usually billed as a flat fee, say $30 to $50, or sometimes an hourly rate for guests who need just a little extra time on either end. Airbnb hosts also have room for high-margin upsells, commanding a high rate simply because they sit in the path of foot traffic the listing already has. Add-on services are a good example. Things like airport pickups or premium event setups for birthdays and anniversaries. These carry almost zero marginal cost once your cleaning and turnover staff are already in place, but can add $100 to $500 to a single booking. Some hosts go further and sell experiences. Activities like hosted food tastings, guided local tours, or a guest ranch style add-on. At the premium end of the market, these can command $300 to $800 per person, all inclusive. Here's the mental shift that separates hosts who make money from hosts who don't. You aren't simply buying a property, you're buying a bet on an anchor. A stadium, a beach, a convention center, a hospital, a college. The majority of your guests are choosing you because of what's nearby, not just because of your throw pillows. These attractions are what generate your foot traffic. That means position is worth more than space. A 300-square-foot studio next to a major landmark can out-earn a sprawling house an hour away. But the flip side is real risk. If that anchor closes, or a neighborhood's appeal shifts, or competitors open with better amenities than yours, your occupancy can decline. Sometimes fast. Real estate has a life cycle. The property that was Class A 5 years ago doesn't stay that way forever. The optimistic year. You picked the right market, you hit strong occupancy, you layered in upsells on top of your nightly rate. Do all of that well, and a single property can realistically generate $60,000 to $150,000 in gross annual revenue. That's what top-performing individual listings actually hit, not the outlier stories you see online. Now subtract the operational costs and a healthy net margin for an owner-operator lands around 15% to 25%. After debt service, that's $10,000 to $35,000 a year landing in your pocket from just one property. That's real money. Scale it across 2 or 3 properties though, and 6 figures starts to feel realistic. So, does owning an Airbnb work? Yes, but it's a game of margins, not magic. The hosts who build real wealth here understand one thing early. The building isn't the business. The people walking through the door are. You're using guests to cover the cover charge of the property, while the land underneath quietly builds your wealth over years, not overnight. If you can survive the shifting fee structures, the maintenance churn, and the 3 a.m. phone calls, then it might be eventually worth it. If this is making you rethink your next real estate move, good. That's the goal. Subscribe for a new passive income myth broken down with real numbers every week.